Stock market weekly chart review for the first week of 2023, January 2nd through January 6th. As I mentioned, of 2023. Here's our past week. And then just looking at economic events coming up, we see we've got a handful here, maybe a little more than a handful. What are the ones that could be very unemployment rate, household spending. I mean, I guess it depends on how much you look into listen to this stuff. But something that usually makes the news would be like consumer price index, producer price index. Another one, jobless claims. So those could be some market moving type of things. Dividends. If you, I think the banks start. Is it the banks start? Maybe start reporting next week. I don't see any banks right there, but maybe it's sometime this month. So depending on how you approach trading, investing, that type of thing, you may or may not need to pay a little more attention to these type of market moving things. Now, for somebody that just wants to basically sell cash secured put options on good fundamentally sound stocks that you don't mind owning or you don't mind selling through selling covered call options against them, when you're kind of doing stuff like that, it doesn't matter as much. It's not to say that it doesn't matter and never matters or something like that, but you can minimize it. For example, there's a couple stocks, maybe more than a couple, but let's just say at least a couple stocks that I'm totally okay with owning the rest of my life. And actually, I don't mind getting more shares of them and things like that. So I kind of don't pay attention to their earnings reports. And one reason why is for these particular stocks. Now, this isn't the only way that that's like, I guess you could say, that's how I am investing. Now, sometimes I'm trading stocks, but the trading and the investing are two different things. You want to know what you're doing and apply the appropriate measures when you're doing those. But when you're going to invest in a stock, the price might go up and down, but it's like until you want to sell it, it just doesn't matter. I've used this analogy before. If you purchase a home and you plan on living in that home for 15 years, if 2 years down the road, the price that you could sell it for, let's say you purchased the home right here, 2 years down the road, the market price is down here. Does it matter? No, not if you don't plan on selling it until 10 years down the road. 10 years down the road, then it matters, right? But 2 years, it doesn't matter. So let's say if you purchase a home and your plan was to sell it in 2 years, then it matters. So you want to put things in the appropriate context of your time frame and things like this. And when you're listening to people in the media or your neighbors or whoever it is, your buddies, your acquaintances, someone you just met, when they're talking about this stuff, this stock is going to do this or whatever, that's going to do that. You don't necessarily have to ask them. If you feel like asking them, you can. But what you want to realize is, or what you want to potentially find out is, what time frame are you referring to? And whatever time frame they're referring to, that's great and dandy. But the most important thing to you is, what time frame are you concerned with? Who cares what these yahoos, including me, who cares what time frame I care about? Figure out what time frame you care about. If you kind of like this way of thinking, then I want to let you know that this video is being brought to you by ihavesuccess.com. ihavesuccess.com is a website to help you begin your trading journey by learning how to sell cash secured put options in a way that allows myself, that's me right there, to grow and improve in the process. All right, because I want to grow and improve. There's a lot there. Over the last 15 or so years, I've heard about a lot of people saying like, I want to help 100 people become millionaires, or I want to help this. And I hardly ever hear anyone say what's in it for them. I hardly ever have heard, I don't remember actually ever hearing someone say, I want to help people do this and I want to get this in return. But you know, if we were to see what's going on in these people's brains, a lot of times there's something they want to get out of it. Then put it on your mission statement. You know, what you think we're not smart enough to know that you get something out of it? You think that we really think that all you care about is helping people? That's why you're spending money on YouTube ads, because you just want to help some people so much? Sometimes these people, if you really think about it, they say some real stupid stuff. Or maybe it's not stupid, maybe it's like stupid in relationship to, like, if it was in a different context and, you know, just a random person walks up to you on the street and they're like, I want to help you. You're probably thinking, why? What's going on? What's the catch? Well, just because somebody has a video on YouTube, like, you should still think, what's the catch? Just because some dork has a fancy suit, $40,000 teeth in his mouth or her mouth, a fancy hairdo, what's the catch? What's the catch? What's in it for you? Right? So anyways, so ihavesuccess.com. I want to help people learn how to sell cash secured put options. And the reason why is if you have a bank account, you have the internet connection, and you spend money at least once a year, there's no reason why you shouldn't be doing this. Did you see the price of eggs this year compared to 7 years ago? They're up. Did you see the price of shoes this year compared to 20 years ago? They're up. Did you see the price of a foot-long Subway sandwich this year compared to 5 years ago? They're up. There's hardly anything that has gone down in price. Maybe some things here or there, but that's not the big picture. The big picture, you could come up with a lot of little things. Well, you know, a horse and buggy is less than it used to be. Yeah, because it's obsolete. You know, so you could nitpick it, and you could engineer it, and you could figure out how this thing is wrong, and you can be broke. Whatever, I don't care. Your bank account's not my bank account. Just like I was saying, don't worry about my timeline. You know, don't worry about their timeline. Worry about your timeline when it comes to this stuff. Well, you know what? I don't really care about what's going on in your bank account. If you make silly decisions, if you make stupid decisions, whether you can't feed your family or not, that does not affect your good buddy Brent's ability to feed his family. So think about that. You want to poke holes? Want to poke holes in a theory, or do you want to say, "Hey, there's the water. I'm going to drink"? It's up to you. Now, the kind of people that I'm attempting to help are the kind of people that say, "You know what? I got it, Brent. I get what you're saying. Yeah, prices overall, they keep going up. They keep going up. So what can I do about it?" So what I'm going to do right here at 8 minutes, it's coming up. Boom, there it is. There was a link that just popped up to a video that gives you 5 reasons why you should be selling cash secured put options. It's not how to sell, but there are 5 big picture, like a theoretical, philosophical reasons, something along those terms of why you should be selling. In the description of this video below, there is a link to the I Have Success website. You see right here. You can download, there's I think 4 different things you can download. For selling cash secured put options, you want to download this highlighted one at the minimum. Get this one. These are not stock recommendations. These are examples of stocks that I have sold cash secured put options on for a couple of years, and kind of giving you ideas of why I like them. When you read this in combination with this and start understanding this mental framework, and then you also watch the playlist that's in the description below in this video, entitled something like Option Trading for Beginners, with beginners in all caps. You watch that playlist with 5 videos. You can start putting all this information together. You'll be able to have an idea of how to make decisions for yourself. And then you want to test whether your decision-making ability is accurate or not, so you get a paper trading account. I like to use Thinkorswim. You can use Webull. You can use Thinkorswim. You can use any paper trading service that's out there. If you can do it for free, just grab one and start using it. And then if you kind of get familiar with it, you want to test another one out, test it out. Again, don't take other people's word on which one's the best as holy gospel. You test things out. I heard Andy Tanner explain it about different brokerage accounts, like, you know, like different cars. Which car is the best? Well, there's all these different factors, you know. But basically, once you learn to drive, you know how to drive. One might have the windshield wipers turn on and off the windshield wipers in a different spot. Another one might have the parking brake in a different spot. But basically, you know, they're kind of all the same, and you just figure out where this different stuff is. So just start getting used to that stuff. The most important thing is not these little nitpicky details about like where's the analyze tab or whatever, you know, does it have this and does it have that. Those things are important once you kind of know what you're doing. The most important thing in the beginning is to realize that you as a human being have the capacity to make decisions for yourself that are in your best interest. And when it comes to your money, you are the only one that knows what's in your best interest. Now, it doesn't mean you know all the strategies. It doesn't mean you know all these different things. No one cares about your money as much as you care about your money. So take ownership of it. Now, with that, we're looking at weekly charts here. 6-month time frame, each candle representing 1 week. Because I just lectured for about 7 to 8 minutes, I got to go through this kind of fast. Now, normally we look at, on a day-to-day basis, I'm making a daily chart review. So we're looking at 1 month. We're looking at something just like this. It might look the same, but it's a different amount of data. It's 1 month instead of 6, and each candle is 1 day. Now, this line is still representing the 200-day moving average, but on a weekly chart, you can put this at a 40-period moving average, which will be close to the 200-day. I don't think it's going to be exact, but it's meant to give you an idea of right in there. So we see with UUP, which represents the dollar, it's a like bullish dollar index. We see in the last 6 months, about halfway through, started going down, broke below that 200-day moving average. Your 200-day moving average it's an average of closing price for the last 200 days. So it's a long-term, shows you a long-term trend in a snapshot. So we see that 200-day moving average moving up, and we see price action has been moving down and broke below that. And we see right here, see how this one is, see how these candles, they have the width is different in certain spots. Like this one, there's a long skinny one here, right? And on this part, and there's this wider part here. What that is, when we look at this candle right here, this is showing us that buying pressure moved prices all the way up here, but selling pressure pushed prices all the way down here. This is where it closed. I don't know, when I zoom in on this, we'll just do it this way. All right, so the reason why I did it this way is because I think when I zoom in, sometimes it loses the cursor, and I want to be able to show you something. Now, just looking at this candle alone, right, what do we know? Well, I know that it opened here for the week. It traded as high up as here, and it closed here on the week. How do I know that? Because I have these charts set up, and by default they're set up like this, that when the candle closes lower than it opened, it's going to be red. So instantly I know the open was here, the close was down here. That's that wider part. I know it traded up here. Okay, so now I know what happened. What message does this tell me? One message, as we talked about, that selling pressure really pushed this down all the way down here. Opened here, and selling pressure, sellers, there was more sellers up here in this area than there was buyers. And look at this, right? What are you not seeing right there? If you're not sure, I'll give you a hint. Look what you see on this one. Look what you see on this one. Look what you see on this one. In fact, even a little bit right there, right? Look what you see. You can barely, if I highlight it, it disappears. You can barely see that there's a little bit here. So what this is telling us is that prices pushed all the way down, and there was no buying pushing it up. That's what makes these little skinny parts, right? Is that it traded up here, but selling pressure pushed it down here. It traded down here, but buying pressure pushed it up here. So looking at it this way, looking at it in this context, below the 200-day moving average, been in a downtrend, prices pushing down here. That is bearish. But look at, see how, okay, prices started falling here. We have this candle, looks similar, right? But the only difference is this, right? But it looks similar. And then followed up by this, right? In this one, opened here, closed here, but it sold down to here. Buying pressure pushed it up to here. This one, and then prices fall. Right, so prices fall. So prices are falling, and then falling again right here. Look, it kind of going sideways. Fell a little bit more, but kind of going sideways, right? It's not like this sort of decline. In 3 weeks, right, we opened the week here. We closed 3 weeks later, we're closing here. That's kind of steep, right? Look at this one. We opened the week here. 3 weeks later, we closed the week here. Not as steep of a decline, right? Whatever this price is about 30.25, and then we're about I don't know, what is that? 29.80. I'm not sure, right? That's a significant. That's more of a difference than from about 28 something, like barely over 28 to like barely under 28. So what does that say? Momentum seems to be slowing down a little bit. We see it tested up here though. So what would that indicate to us? You know, first thing we want to keep in mind is that the dollar is a political instrument. So politics are involved. We got to think about more. If we want to try to pick direction of what's going to happen, we want to think about more than just what we're seeing for the candles. But let's pretend this is not the dollar. Let's just pretend this is any ABC company. So when we see it below the 200-day moving average, we see selling and buying kind of seeming to be slowing down. We see it made a run to this 200-day moving average, but got pushed back. Didn't even get all the way up there. But we also see that here's the low. Last week it made a lower low, right? This week, wait, if you're just looking at between these 2 weeks, we got a low and we got a higher low. We got a high, we got a higher high. In the big context, it's nothing, but just kind of trying to get an idea of what might happen. Okay, maybe we're gonna kind of go sideways a little bit. Maybe it'll try to hit this 200-day moving average again, and then maybe fall down. We'll see. But it's you know, we don't particularly have the same amount of selling like that. Maybe it'll come in. You know, maybe it'll come in. Maybe we'll see this and a little more. But even from this, you see it's just not as much of a steep decline, right? So maybe it seems like the selling pressure kind of came off a little bit. And we're going to go through them a little bit faster, less talking about you know, the information that the different candles are telling us. That was a pretty good example, short little mini class in attempting to diagnose what might happen in the future based on what the candles are telling us. And something that we could potentially look at though is, you know, again, this is not about it's not about this particular thing. When this next thing I'm going to talk about, it's just specifically looking at this chart and sort of like these prices. But again, because UUP is representing the dollar, and you know, the dollar is as I mentioned, it's a political thing. You know, for example, since we're talking about selling cash secured put options, where might you sell cash secured put option at if you wanted to purchase this? I don't know. We'd have to look at a little more. We see that over in the last 6 months it's hitting a low. So maybe you want to sell something down here. You want to see if this was a paper asset, if this was a stock that you wanted to invest in. Potentially, you're looking at a discount phase. Potentially, I can tell you right here, boom, above there. That's a good place to sell call options. It's pretty hard to get back up there. Maybe another place. See where, right in here. I wouldn't doubt it if somewhere in there would be potentially a good spot to sell above that. Like this is going to be the safest spot. This is the next safest spot. And then probably the least safest spot is, well, maybe, you know, maybe not the least, but maybe another spot would be kind of, somewhere in there maybe. But as we get closer, right, we're taking more of a risk, you know, coming down here. And we see it might be bottoming out. So somewhere between here and here, selling something, that's probably some danger zone. Maybe getting down here around even lower. Maybe that's a little safer. You see how, do you see how I'm, what my eyes are gravitating towards? Where does the prices kind of get clumpy, right? Where does it sort of seem like it's starting to make a line? You can't think of it as a straight line like this. Think of it more as kind of a range, right? You see prices were kind of fluidly moving down here. But right there started kind of acting weird in this little area, right? Look to the left. Look at when prices were on top of that area. This was acting as support. It would appear that this is acting as support. When the prices are on the bottom of this area, it would appear it's acting as resistance. Right? Tested it here before. Went up here. Couldn't make it. Doji-ish. Came back here. Pivoted here when it's down here, testing this 27. Rallied back up. Took a lot of, look at all that energy that it gave. And then the next day, boom, it's able to break above it. And look, it even comes down here and test it. Now it's on that other side. It's retesting that. It's retesting, showing strong. Boom, goes up here. And same thing, we could talk about same thing in that area, but let's look back down here. Drops down, right? With a lot of force, whereas not enough force when it was testing it before. Now here's enough force to break through that support. And then it kind of comes back up. It's going to test this again, but now it's on the bottom side of it. So it would need more energy to burst up. So depending, when you find little spots like that, depending on which side the price action's on, you can potentially look at it as like, okay, and as you know, if it's below this or above it, it's going to act as support or resistance to it. How do you figure it out? You look at where the prices kind of got stuck before, or where they keep kind of touching. So now let's say that you did sell, you sold a call option up here, covered, naked, whatever, like whatever. It's like it's since it's not an actual trade we're looking at doing, then we don't have to, we're just theoretically looking at this 6 months of data. That's all we're doing, and just kind of using this as an example of where, looking at the candles, how might we look at these candles and think about where would a price not go? And in the meantime of monitoring it, what would we do? So if we sold it up here, it doesn't mean we don't pay attention, but we have some levels that we could watch to see how much risk we might be getting into. So for right now, if the price action stays below the 200-day moving average, then we don't have anything to worry about, do we? Nope, because if it can't get above this 200-day moving average, it's not getting up here. And then let's say if it does get above the 200-day moving average, is it going to close above the 200-day moving average? And if it closes one day above the 200-day moving average, then we want to see, does it continue to close above the 200-day moving average and this place? Since we see prices kind of sticking around there, we don't have to look at it as like it's $29 exactly. It's a little bit of a range. But if we see now prices they're over the 200, and now they start, it comes up here, keeps testing. Now it starts closing above 29. Now it's doing this, right? Now it starts doing this above 29. The next place that we want to look at is maybe like this range of like 28 something to about 30 something, 31, 32. If prices start pushing up against here, you know what? We're getting closer to this, right? So I don't know exactly where you would want to, but if you sold a call option up here, depending if it was naked, if it was covered, what the situation was, all these things, then you might want to consider taking the appropriate actions to manage your position. What would those appropriate actions be? It depends on what you're trying to achieve. If it's naked, if it's covered, if what's your account size, right? There's all these different things. So that's why this is not a recommendation to do this on UUP. In fact, I don't think you should do it on UUP. I want to do it on UUP, but we're just looking at UUP as an example, regardless of what the stock name is. All right, we're just looking at these candles here, price action, and what you could potentially do. Now let's go through these faster. TLT, 20-year bonds. We see it's below the 200-day moving average. Price action still moving down, but look at here. We got this pivot area here, right? This area here, we pivoted up here, pivoted down here, and now we got a little pivot right here too. Let's retesting this. We can see how prices fell down here. Let me get that out of here. You see, I can see a little bit, like I can see a little bit of it right there. Here, it did it again. Kind of did it right there. It did it right there. And when price and did it right there. And what's that? It's like it's showing that this little area, something's going on in this little area. So now it makes sense to me that it would fall down to here and then bounce up, because it seems like this area of around 100 is acting like support and resistance. So so what, what trend is it in a downward trend? I guess it kind of depends on the timeline we're looking at. So at the moment, it hasn't broken over this high, hasn't broken below this low, and until maybe here's this most recent pivot here, right? The most recent high, until it breaks above that, I don't know. I mean, if it can't break above this, this is where it pivoted and started going down. If it comes up and tests this again and doesn't pass it, plus we have this downward sloping 200-day moving average, which we're kind of getting close to. It got close to right there, broke back down. So we'll see what happens. Potentially, it could just still be in a downtrend, and it just had like I guess a bear rally in the meantime. Gold contracts. Now, gold contracts. Looking at the weekly chart, we see that gold looks strong to the upside. You want to keep in mind though, gold also, like the dollar, it's a political asset. How so? Well, what do central bankers buy? They might claim they don't buy gold, but watch what they do. Don't listen to what they say when it comes to gold. And who's buying these contracts to push us up? I don't know. Somebody's buying them, but we see this kind of line going sideways, right? Boom. Kind of like was sort of in this trading range right there. See, it potentially broke out above that, closing the week. The other thing to keep in mind about gold, this is gold futures contract. This doesn't mean if you buy an ounce of gold, this is the price you're going to get. So find out, try to buy an ounce of gold, see what price you get. Is it more or is it less? Is it exactly the same? And if it's more or less, just realize like you don't want to look at this number and think that's what you can buy physical gold for. You want to make the appropriate adjustment. So find that out for yourself. I know what the answer is, but sometimes if I try to, there's a saying about the butterfly. The butterfly, it's in a cocoon, and it needs to bat its wings against the cocoon and break out on its own. And if you feel sorry for the butterfly, the caterpillar at that time, transitioned into a butterfly, if you feel sorry for it and you open up the cocoon, it won't be able to fly because it needs to break through the resistance on its own. So that's kind of how I view this stuff. Like some stuff I don't mind. I'm happy to talk about it because it helps me, right? But at the same time, I don't want to rob you of your growth lesson. And if someone wants all the answers dumped onto them, that's not my kind of person. Great, we can be acquaintances. I can say hi in passing, but I don't hang out with people like that. My friend circle is made up of people that want to put the mental effort in so they truly grasp the concepts, and they don't need to rely on the suspect opinion of other people. So go check out what can you actually buy an ounce of gold for, and find out how a physical ounce of gold relates to this number right there. If you don't want to do it, don't do it. I don't care. And oil, we see oil has just basically it's in this downward channel at the moment, right? Price has been going down. And I'm a guy that I like being long oil, but this is what price is doing. So that's what it's been doing. And obviously, if it's going to go into an uptrend, it's kind of got to reverse this. But looking at this, that's why the weekly chart is good. When you're looking at the weekly chart, you can see that it's been moving down. There's nothing really to indicate that it's going to be moving up. Now here we see it tested this 70, right? Is it going to break below? But we see here, boom, look at right there, all this through there, right? Dropped back down here. It's a lot of seems to be a lot of resistance at 80. So right now it seems like maybe the trading range is between 70 and 80. Well, maybe before the trading range was like kind of through here, and it dropped down to here. went up to here, retest that right there, right? Retest it here, but it's lower. It's lower. Guess it up here, it got there. So it's just kind of been stair stepping down, just like Bitcoin. Stair stepping down. Boop, 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 boop. If you look at it more, look at like a year, kind of see that same thing. All right. Now, for some people, for me, I can't get that to stay where I want it to stay, so I'll put it over here. For some people, this is the row that they like, and because this is all the stock market stuff. S&P 500, Dow Jones, Nasdaq, Russell 2000. Right? We got the 4 big indices of the stock market. By looking at these 4, we have an idea of what the overall market's doing. This is the VIX. The VIX is known as a volatility index, has a nickname of the fear meter. Right? This last week, fear dropped down. And when we look at 6 months, here's the max fear has been, here's the lowest fear has been. Maybe it's not completely accurate to say fear, but volatility. If I say fear and it's somewhat not accurate, please forgive me. When I first learned about it years ago, I was it was pounded into my head that's the fear index or the fear meter. But we see that it's dropped, right? Where's the price action right now? 21.13. In the last 6 months, where's 21.13 in relationship to being closer to 34, closer to 19, whatever, 18? It's closer to this, right? So, and you look at this context of 6 months, by this, for some reason, we would think in the last 6 months, people have become less fearful in the stock market. Why is that, though? Prices moving over the last 6 months in the S&P 500, price is still below the 200-day moving average. We see here it tested it, couldn't make it. Tested it, couldn't make it. Here couldn't even get up to it. Now we're here. Maybe is it because of this? I'm sure it's not only because of this. Is that telling us something? Came all the way down here, rallied up. So even though we got a lower high, maybe we now have a low, higher low. The distance between these two is shorter, right? Look at the distance between here. If this is going to be the new low. Now, if sometime next week, if prices start dropping down here and testing over here, it's a different story. But what do we see going on right now? The Dow Jones on the 6 months, we see that 200-day moving average. It's definitely moving down. Price action is above that. Seems like right in here is kind of this resistance point, though, right? Now, sometimes people will say that moving averages are support and resistance. They're not. They're moving averages. They can act as, but they're not. Just like I can act as somebody's uncle, but I'm not. I'm just acting as it. And so just keep that in mind. So right now, see it was on the bottom of it, tested it, couldn't do it. At that time, it is like definitely acting as some resistance right there. Right here, it just kind of went up, but it tested it, came back down here. Now it's been holding some support right there. But it seems like this area, which is in this area, and this area, which is there, and it's just kind of in there. All right, so sometimes it's a bit of a range. So let's see. Compared to this is at least something bullish that's on top of the 200-day moving average. Nasdaq price is still below. That's a steep decline, right? And the Nasdaq high, lower high, lower high. It's a weak lower high, but that's what we see. So prices moving down. But what do we also see? Look at this. Look at that. Right? Seems like it's in this range. Now, if you've been watching some of those daily market review videos, I was talking about on gold where prices were like flat in here, but pushing up on here. And generally, when to the flat side, if prices keep pushing up to whatever that flat side is, it'll break to the upside or downside, wherever that flat side is. So does it look like we're sort of flat in here with prices pushing down? It kind of looks like that to me. All right, prices pushing down below a downward sloping 200-day moving average. So what that's telling me that there's at least an indication that we could see prices break lower because of that downward sloping prices, and definitely below a downward sloping 200-day moving average. The price is kind of flat in here. It doesn't mean it's going to happen, but I wouldn't be surprised if prices broke to the downside. Plus, downward sloping 200-day moving average below that. Downward sloping 200-day moving average, okay, it's above that, but it's still downward sloping 200-day moving average. And the Russell 2000, below price action below downward sloping 200-day moving average. Got this pivot area here, which is tested right here earlier. Rallies up here, pivots there, comes back down, retesting this area, come up. But look at this now. Look at that, where prices kind of get sticky in here, whether it's above or below. They're doing the same thing right there. But now look at, couldn't rally up as high. Rallied up here. Boop. Now it's rallying this time. Boop, here where it got tested before. You can see it kind of right here too. It broke through on that side with this candle. Came back and tested that area right there. Now it's on the upside of that. So it would appear, right, we got this. We got a pivot. Can't get up as high as the last time it pivoted right here. At least it appears that it pivoted. We're not really going back further. And yeah, so I wouldn't be surprised if we see more, more pressure to the, more prices going to the downside. And speaking of prices going to the downside, so I guess I need this right there. We'll look at the 12 sectors of the stock market a lot faster this time. I know I said we're not going to be doing some more like, what was it, mini little classes, but let's just look at, we're taking a very big picture look. We got 12 sectors of the stock market here. We got a 200-day moving average. We know it's the 40 period, but it's representing the 200-day. And let's just kind of get a big idea of, like, do we think those indices, which there's 4 of them, right? So those different indices, I'm gonna put that up. I can put that right here for now. We got 4 different indices. 1, 2, 3, and 4. Dow Jones, this is the only one that's above the 200-day moving average. Everything else is below, but it's kind of, they've been testing it, right? So 3 out of 4 have been below the a downward sloping 200-day moving average. Now, sooner or later in life, just because you're down below the 200-day moving average doesn't mean that's how life is going to be the rest of for the next 1,000 years. It can break up above it. If these indices are going to break up above it, right? Instead of having 1 above it, maybe have 2 above it. If that's going to happen, we're going to see it happen in here, right? Because this is looking at a really, really big picture. This is still looking at a big picture, but it's smaller than looking at this picture. So technology, right? Do we see anything? We see it's below that downward sloping 200-day moving average. Weekly candles, anything? We got a pivot here. We see anything super bullish? I don't see anything super bullish here, right? It's not that I see anything super bearish, but at the same time, I don't see anything super bullish, and it's been in a bear trend, so I wouldn't be surprised, right? That's this last little bit of candles not giving me too much faith in something moving to the upside, especially when it couldn't go here. So I wouldn't be surprised if it tested 120 right here. Wouldn't be surprised if it's going to test it again. Let's see if it holds. That was a sector of technology. Now, healthcare, above that 200-day moving average, which has kind of been like You know, if you look from here to here, it's a downward sloping 200-day moving average, but it's kind of sideways, right? I consider that more sideways than down. I mean, technically, this part is higher than this part, but it's not debatably higher, but it's not downward sloping like this, right? This has kind of been moving sideways. It kind of might move up sideways a little bit, and you can see that. I can see that. Like, look where prices started here. They're ending here. You know, traded all the way down here, traded all the way up here. So it's kind of been doing this up and down, above and below, almost equal amount of time below and equal amount of distance above and below, which would kind of make this in a sideways trend overall, if you, in a certain context. And for me personally, I don't ever look at this stuff as being like 100% right, 100% wrong, you know, versus like 135.65. That's it, right? If you say it's, well, you know, it's really 135.62. No, it's 135.67. That's it. The 200-day moving average, or in this case, very specifically, the 40 period moving average is 130.99. But as far as like what's the range, what's this, what's that, you know, it's kind of subjective, but that's objective. That's exactly what these numbers are. So anyways, this kind of seems to be, you know, moving sideways, right? So we got a down, let's say a down here, sideways here. What do we see going on here? Downward, and this is financials. So this is pretty important to the overall stock market. This sector is important to the overall stock market. This sector is important to the overall stock market. We got a downward sloping 200-day moving average, with the majority of our price action being below that, right? In the last 6 months, the majority of the price action has been below that 200-day moving average. Now we're getting a little bit above the 200-day moving average, when we definitely see at this 36 area right here, right, that it got up here and failed, came back down, tested down here, and we see that 33-ish, whatever, kind of right in there. We've seen it before, played this game before, right? Seems to have some spot right there where it's testing here. So tested down here. So unless we really see it breaking above the 36 and staying above the 36, maybe it's just going to continue its downward trend. But we do see low, low, higher low. High, tiny bit high? No, not really. I don't think so, really. But maybe what we could say, looking from here to here, is it kind of going sideways? This price is pushing up? Maybe. So maybe we'll see a pop up to the upside. So for that one, I'm not completely confident on that as far as picking it up, down, or sideways. At the moment, until it breaks through, and I feel like I'm kind of maybe in a stretch for this here. You know, I think I might really be doing some chart finagling here on that one. So so I clear that off. There's too much gunk on there. So what am I seeing? You know, I'm gonna say at the moment, another sideways one until I see it really break above this 36. Right? It's gonna be my forecast for the moment. Industrial, kind of looking at the same thing. I'm seeing like it seems like it's somewhere in this range. It's not able to get above that range at the moment. It could, you know, if it keeps pressing up against that. But that downward sloping 200-day moving average. So hey, prices pushing up, but they got to push up. They got to push up harder. You know, in this one, I guess a case could be made for that too. So sideways to up. Sideways to up. This kind of looks sideways. This one below, price action just trying to get above this 200-day moving average, and you know, we see it happened here. We see it happened, or it's still above it, so that's good. This one's trying to break above it. This one is just not above that 200-day moving average. This one is it's above the 200-day moving average. Energy in the last 6 months. You know, it's been going strong, even though was it the price of crude oil, but the whole energy sector, right? Those are doing good. So you know, I've been kind of sad that when oil keeps selling off, but the you know the stocks in the sector of the energy, they're not like, man, drop down here, drop down here, give me some good discounts. I don't see that happening. All right, so what do we see going on here? Down below that 200-day moving average, we see prices just looking like, I don't know, nothing to the upside. This, to me, this is screaming sideways. I don't know about you, but it just seems sideways. Came down here, test all this low, just like a total V. What's it going to do? Is it going to be making a W and go higher, or is it going to make an M and go lower? Kind of like an M. So over here, looks to me, look at sideways. That's what I'm seeing, right? Prices started here 6 months ago, and they're right back here 6 months ago. They went above here, they went below here, and this one overall just seems lower in the real estate sector. Retail, look at this. It's kind of sideways. It's kind of sideways, but look at the steepness of that downward sloping 200-day moving average. It seems like it's kind of going sideways. So overall, like I have been saying that for a while. For me personally, I'm looking at the sideways to downward market is my those two being like primarily. I'm still sticking with that idea of a sideways to downward. I think it's totally possible, right? It's possible that it could go in one of three directions. It's possible that it could go up, it's possible that it could go down, and it's possible that it can go sideways. That's it. Those are our three options. Those are three choices. It can do a combination of them. All right, so we see right here, I've done this enough time that it's around 357. I've done this enough times that that's around 420. And then we got this area right in here and right in here that's like 400 to about 380. And then if you look back here, you see it was in here before. That's sort of in this, like it's a range, right? And right here, if you look to the left, not as much. Look to the left this way, yeah, you kind of see it right in there. But I'm thinking like until it breaks out of this big part of the range, I think could just be going sideways. But it can do like this. It can go up to here, down to here, up to here, down to here. Like that's a lot of volatility. From 360 up to 420, that's a lot of up and down, right? But if it goes up and down within that range, it's basically sideways. So I'm still thinking that we could grind out of this bear market through a sideways moving market, and that's what I think is more likely to happen. I think, to me, that's what when I'm looking at these charts, that's what I'm thinking. I'm thinking the most likely outcome is grinding sideways. But I think the second most likely outcome could be dropping. I think it's weak. I think if there weren't things like if things were not in existence, such as such as this. Woo, doggies! That's not working, is it? Where's the thickness there? Come on. There. We need this. There we go. Look at that. Created in 1988. How old were you in 1988? This has been around since 1988. I was born in 1976, so I was alive a little bit. I wasn't really old enough to really understand what was going on in the stock market, but it was created by President Ronald Reagan at the time. It's a plunge protection team, right? Then it's coined the plunge protection team by the Washington Post, who I think the Amazon guy owns now, in 1997, right? So it's been being called the plunge protection team. Let's just really go into that big one. They keep the stock market from going only so low. Not so low by itself like Han, but only down to a certain point. But I tell you what, the same stuff that they do to keep it from going down, if they wanted to, they could probably use that same sort of techniques to push it down. Depends on what's in their interest. Why would it be in their interest to push it down? I don't know. I just don't put it past any politicians to have some interest. So we got that. Plunge protection team. We also got this thing. Quantitative easing. Now whether we got quantitative easing. Right here, right? 2012. And let's see if it says anything about that. Operation Twist. What I'm just kind of taking a quick look for is see if they're going to compare Operation Twist to quantitative easing, because technically maybe doing a Jeff Schneider technical stuff, maybe it's not the same as quantitative easing. But if it does this to the woo, that is not what I was trying to do. If it does, if quantitative easing does this to the stock market and Operation Twist does this to the stock market, then it kind of doesn't matter if we call it Operation Twist or quantitative easing. And it kind of doesn't matter if it's, no, this time we weren't buying treasuries. This time we were doing something different with treasuries. But if the result is doing this, then what does it matter what the name is? If it gooses the stock market to the upside. So my point with this stuff, right, is that we got quantitative easing. We got tricks or whatever. We got these tools, quote unquote tools, that the Fed, the Treasury, those people can use. We got the plunge protection team. I think without those things, I think the market's down. Boom. I think fair market value, if we take out the fascism of having the markets intertwined with government per Mussolini's definition, then I think we see, boom, we see it go down. But we have the government able to intertwine, the government is intertwined with it. So if they don't want it to go down, they're going to try to do things to not have it go down. But it might not be, maybe they're not doing some sort of technique to make it go up. But if they're not doing some sort of technique to make it go up, then I don't think it's going to go up. But maybe it's not really going to go down. So that's what I'm thinking, that most likely outcome is sideways to down. If they announce some sort of thing to make it go up, well, it's maybe they're not going to announce it to make it go up, but whatever they market it as, whatever they market it as, whatever flows out of their mouth. But if this is the result, then that's the result. Now, am I saying they shouldn't do that? Nope, I'm not saying that. Am I saying I agree with it? Nope, I'm not saying that. Am I saying I disagree with it? Nope, I'm not saying that. I'm saying your good buddy Brent is trying to look at all the factors that affect the stock market. And how can Brent make money? Brent makes money by having an idea of what's going on. Right? So what can I do? If I think it's possible it's going to go sideways to down, and in the whole purpose of I Have Success is to help people learn to sell cash secured put options on on stocks that you wouldn't mind owning, then when you start getting, when you see, when you can look at the S&P 500 as a kind of proxy for the overall stock market. You see right now, it seems to be holding around here, right? It came down and tested this 380, right? I think you see it, right? Tested this 380 or close to that 380, right in here. So it's testing that 380, you know, consider maybe, now I'm not talking about doing this on the S&P 500, whatever particular company that you are okay owning fits your all these different parameters. It's suitable for you. S&P 500, right? If it's up here, which it's not right now, but since it's right here, it's testing this, right? We want to see it maybe more up here to feel comfortable selling closer to the money. But when it's here, and definitely if it starts going down here, sell further away from the money. Because if this drops, even if it stays in a trading range and it drops down to here, like your stocks are going to be dropping too. And so here's the first range, somewhere in there. I don't know what you want it to be exactly. I'd say about 380 to 400. When the S&P 500 is closer to this 380 range, make sure you're selling further away from the money. If it gets closer up to here, maybe you can come a little closer to the money, but be prepared if it does this, right? Because if it's doing this, this means it's putting pressure down on your stock. So kind of use this trading range. If you see it going up here, hey, doesn't mean we're necessarily going into a bull market. Doesn't mean that's all, as far as fear to the downside is over. Because look, it did it right here and it boop, came back down. Right, and then it came down hard all the way down here. So that's one thing that you can kind of keep in mind. Watch the S&P 500. Watch this trading range. Your big range of about 360 to about 420, in this tighter range of somewhere kind of in there. And you can narrow it down and stuff, but just to kind of, you know, keep it easy for yourself to potentially do that. So it's great. I think life is good. I don't care that there's a plunge protection team. I don't care that there's quantitative easing. I get it. There's like adverse effects for things like this. I get it. But when I say I don't care in relationship to making money in the stock market. I just want to acknowledge it's there, figure out how it affects things, and make the best decisions I can make for myself. Because you know what? My financial planner, I don't have a financial planner. I'm my own financial planner. If I had a financial planner, they're not going to be thinking about these things for me. Chances are. I don't know that with 100% certainty, but I would say there's probably at least the 80 to 90% accuracy. The 80 to 90%, maybe more, of your average financial planners out there are not thinking about things in this context of dealing with your money. What they're thinking about is commissions. AUM. That's what they're thinking about. AUM. You know what AUM means? If you don't, you got to know what this means. AUM. Because if you're paying someone to manage your money and you don't know this term, I tell you what, they know this term. When they look at you, this is what they think about. AUM. Assets under management. They want to keep your assets under their management. I'm suggesting that you learn how to make suitable decisions for yourself. So your assets stay under your management, not somebody else's management. But maybe you get to a point where you understand how to manage things so well that you can have a conversation with a financial advisor and you can see if they're going to manage your money based on stuff like this, or if they're just going to let the stock market tank and just try to keep your assets under management no matter what, so they can keep taking that percentage of how much assets they have under management. Because some of these people, they get rewarded whether or not they make you money or not. They don't get paid based on performance. They get paid on assets under management. They make you money, they get paid. They don't make you money, they get paid. How about that? You want to use a plumber that's going to get paid whether or not they unclog your toilet or not? How about that? How about you want to pay the barber whether they cut your hair or not? How about that? They just let you sit in the chair whether you get a good haircut or not? How about that? How about the car dealership? You want to pay the car dealership regardless if the car is drivable or not? How about that? So why would it be any different when it comes to these quote unquote financial planners, financial managers? Who cares about your money the most? You do. Learn some skills so you can manage your money. You guys have a great weekend.